Well, top of the morning to you. My name is Dan Frio, and I do this report every day to keep you or teach you the economics behind real estate. So we just had this news come out, and that's why I was waiting to do my video this morning. June homes sales drop to the slowest pace in 14 years as short supply chokes the market. Guys, you want a housing crash? You got it. Okay, here's the crash. Unfortunately, when you have a crash in supply, but your demand still exceeds that supply, you're still going to have price increases. So why don't we have prices plummeting? Well, some areas of the country, you might see prices tumbling. A lot of the places in the country, you are not seeing prices tumbling, and there's still some good value out there. So I have a video actually coming out in about an hour that's going to go over the top 10 places in the country that CNBC, they did a huge poll, great analytics behind it, and they're giving us the 10 top cities that you might consider good value. And then what I did is I went a little further. I digged a little bit deeper, and I saw that, okay, there's all this stimulus money coming out. Well, what states are actually going to get the most bang for the buck with that money? Because you got to think of it this way. If you have a state getting $1.2 billion for infrastructure, what are they going to do with that money? Well, they're going to build roads and bridges and all kind of stuff, okay, infrastructure. Well, they need people to do that building, so they're going to hire workers. They're going to need white and blue collar workers throughout that whole community. What? To build the bridges, to build the roads, and then to house these people, to feed these people, to do all their, they have to go grocery shopping. They need to do their taxes. They might have dry cleaning. They might have this. They might go work out. They have bars, all this stuff. So those areas are going to need infrastructure, and with that infrastructure, it's going to come people. So I'm going to give you the top 10 areas coming up in maybe 24 that might be really, really good values because those communities and states are really growing. So when you're looking at a housing crash, folks, you got it. And here it was just validated today. So the next thing we want to go over to is treasury yields. Why? Well, because I can't really figure out what's going on with home prices, but what I can at least give you some guidelines or some input on what's going on with rates. So right now, this is one of the only times in history that I've known that the Federal Reserve is in this much control of our whole economy. Because the Federal Reserve, if they come in and whatever they do is going to make the stock market, bond market, housing market, and everything else either go way up or way down. And they're doing a pretty good job of bringing things way down right now. So treasury yields, as investors look at the economic outlook, is all going to be based on, what the heck the Federal Reserve is going to do. So stocks making news. Here's an interesting article that I just came out with or figured out as well. NASDAQ falls after the latest batch of earnings come in. So my concern is like I do on a daily basis, is come out here and tell you guys what's going on with inflation. So I look at, okay, what is the producer's inflation look like? Because these are the people or companies making our stuff. If their prices are going up, well, obviously our prices are going to go up because we're the final consumption of that product. So we look at that. Well, the producer prices, which we saw on the producer price index last week, has come down quite a bit. Okay, so are these companies passing those savings on to us, or are they just increasing their bottom lines? Well, a report just came out this morning, and I'm going to show you that briefly because this is of interest to you guys, or it should be. Of the S&P 500 companies that have reported earnings thus far, 74% have exceeded expectations. So it doesn't look like they're passing those savings along to us, the consumer. But once they do, or once they're getting forced to do because consumers start pulling back on their spending, you're going to see this even help the inflation numbers as well. So let's go over to the economic calendar we have today. And there's a little bit of a conundrum here. This is why you have to look at multiple reports. So if you go through this report, it was just posted. These are the three things that came out this morning so far as the initial jobless claims. Well, the Federal Reserve, their goal is to actually pump up initial jobless claims. So these are people losing their jobs, okay? Because the Federal Reserve figures if you lose your job, you're not getting a paycheck, thus you can't spend any money, thus you can't buy stuff, so that's going to bring down inflation. Well, the number that we saw previously came in at 237,000, right here, okay? The expectations were to pump up to 242. It actually dropped all the way down to 228. But you have to dig a little bit deeper here, okay? And I'm going to show you that in the next chart. Federal manufacturing index, minus 13, terrible. Okay, terrible. That means manufacturing companies are starting to really pull back on manufacturing. Then existing home sales, this is dropping off the cliff, and we just went over that. So let's get over to this right here. So the first thing I did is I came in and I said, wait a second. MBSs are down 70. That means we're going to probably get an increase in rates today of at least a quarter to 3/8. Okay, so that's already built in. But I can't figure out why. Well, a lot of the data seems skewed right now, especially with more with this number. So I'm going to give you a little bit of a difference there. But the numbers that I want to show you right here is, see initial jobless claims right through here. It matches what we just went over. But here's something to look at. The previous number that came in was 1,721,000 people. I'm sorry, where is that? Existing home sales, continued claims. Continued claim, yes. 1.721 million people filed for continued claims. That's what they're saying, okay? Where is it now? 1.754. 1.754, a huge increase, okay? Not huge, but it's quite a bit. So when you look at this number, you can't say, well, it's going in the wrong direction because the Federal Reserve wants more and more people to lose their job, because more and more people are on continued claims, and that has spiked. Look at it, from 1.721 million to 1.754 million. So that's a big move there. So this kind of gives us a little bit of conflicting data when it comes to the jobs market. So you have to really dive into this. But here's the concern I have. If you look through here, this is showing the MBS market is down 70. So what is that? Well, the MBS market is basically a bond that trades on Wall Street. The yield is the biggest component of your mortgage rate. So if the price, which you're seeing on the screen, that's the price of the bond. If the price of the bond goes down, there's a yin-yang or a reverse or a flip-flop relationship. If the price goes down, rates are going up. Okay, so I'm thinking here, it's down 70 bips. So that means we're going to get about a 3/8 increase in rate. But why? Why is it down so much? So I go to MBS Highway, and they used to have this, but then they didn't, and now they have it again. It's showing me right now the MBSs right through here are actually positive, and one is negative 0.03. So I don't know if MBS Highway it has a break in the link right now, or Mortgage New MBS Live, or what's going on here. So there's a little bit of a conundrum going on today. I'll give you guys an update later this afternoon if I can. But it all pivots around what the Federal Reserve is going to do at the next meeting. So to find that out, we go to this. And this is the Chicago Mercantile Exchange. They have a tool, and that tool is called the CME FedWatch tool. Okay, what is it telling us? It's basically telling us what the Federal Reserve is going to do at the next meeting. Well, the next meeting is coming up when? 6 days, 3 hours, 35 minutes, and 16 seconds. And what is it going to tell us? What's the likelihood that the Federal Reserve will change the target funds rate at the next meeting? Well, if you scroll down here, what is the probability that they're going to raise rates? 99.8. So it is already built in, folks. I don't think there's any report that's going to come out by next Tuesday or Wednesday when the Federal Reserve meets that's going to really change that, change their narrative there. But the nice thing is the dot plot. When we look at the dot plot, and if you want to be interested in that, you look right over here. And the dot plot's telling us this should be basically the last rate increase that they have, because it's telling us they want the federal funds rate at be right around 5.5 right through here, and that's where we're going to be at the next meeting. So I think it's going to be the Federal Reserve is more like one and done, because if you look at out at the future, all of them start really dropping down. So a lot of people are saying, well, the Federal Reserve might raise rates at the next meeting or so forth. Let's be concerned about this next meeting and next week on what they do. And also, there's going to be a ton of data coming in by then. And I'm almost going to assure you guys that the next inflation readings that we get are going to be probably in the 2 range. And I'm going to go out on a limb and tell you that now. And that's going to be good news for the markets, bond markets, stock markets, and maybe even the real estate market. So my name is Dan Free. I do this report every day. And if you're out there and you're like, Dan, I would really like to figure out if I can buy a house. Well, how do you do that? You might not know. Is your credit score there? Don't know. Do you make enough money? Have you been on your job long enough? Don't disqualify yourself. Reach out to us. We would love to help you. So how you do that? You can reach out to us right here. Give us a call at 844-775-5626. Or if you're like, hey, Dan, I just need your help. I'm in the position to buy right now. I just need your guidance. Well, do me a favor. Do one thing. Just click the Apply Now button right here, and you're on your way. Within 24 hours, a mortgage advisor will be reaching out to you to go over all the scenarios possible in your situation and guide you down the right path to home ownership. So thank you so much for watching, guys. I only have one thing for you to do today. Give me a thumbs up if you would, please. That's it for today. Hope I see you tomorrow. God bless. Have a fantastic afternoon. Bye-bye.